Differences between bookkeeping, accounting and accountancy. Bookkeeping versus accounting. To prepare the financial records, every business requires bookkeeping and accounting at the end of every accounting year or quarter. Over and above, bookkeeping and accounting assist every business to evaluate its financial worthiness and decide the future. The bookkeeping and accounting are used interchangeably. Bookkeeping. Bookkeeping is the process of maintaining and recording all financial transactions in the original books of entry of a business. The bookkeeping process consists of summarizing and organizing of all the business's transactions in a chronological order and in a systematic manner. Bookkeeping aims on the day-to-day financial transactions and activities of a business. The business maintains and records books of accounts. All accounting transactions like purchases, sales, investments, loans, incomes and expenses etc. are recorded in the original books of accounts. The books of accounts need to be updated for every business transactions as it is the basis of accounting. The correctness of bookkeeping decides the correctness of accounting process following by a business enterprise. Accounting. Accounting is the process of interpreting, analyzing, summarizing and reporting the financial transactions of a business entity. The financial statements prepared in accounting are an accurate summary of financial transactions over an accounting period. These statements consist of a business's financial status, operations, cash flows etc. The business maintains and complies records of daily transactions into financial statements like profit and loss account, balance sheet and cash flow. The financial statements help to evaluate the performance of entities' internal and external users. The following are the differences between bookkeeping and accounting. 1. Bookkeeping is the foundation of accounting. Accounting uses the information provided by bookkeeping to prepare the financial reports and statements. 2. The result of bookkeeping is providing input for accounting. The result of accounting is preparation of financial statement of accounts, also known as final accounts. 3. Bookkeeping is one part of the complete accounting system. Accounting has broader scope than bookkeeping and process of accounting starts where the bookkeeping finishes. 4. The purpose of bookkeeping to maintain a systematic record of financial activities of various transactions in chronological order. The purpose of accounting is to report the results of the operating activities and obtain the financial strength of a business. 5. The objective of bookkeeping is to summarize the effect of all financial transactions of an entity for a given period. The objective of accounting is to interpret and analyze financial information for necessary decision making. 6. Bookkeeping is the responsibility of a bookkeeper. Accounting is the responsibility of an accountant. 6. As bookkeeping is a clerical work, there is no need of any special knowledge or skill. Accounting requires proper skill and knowledge on accounting practices and policies. 7. As bookkeeping is a clerical work, there is no need of any special knowledge or skill. Accounting requires proper skill and knowledge on accounting practices and policies. 8. Financial reports are not part of bookkeeping. Financial report and statements are prepared under the accounting process. 9. Bookkeeping is in accordance with accounting conventions and concepts. Accounting procedures and may vary from one entity to another for interpreting and analyzing financial reports. Accounting versus accountancy. Accounting and accountancy are frequently considered as one and same, whereas these are two different concepts. Accountancy describes the way an entity prepares its financial accounts and in what manner the information collected by recording all financial transactions are being summarized and communicated to the interested users. Accountancy is defined as the systematic knowledge of accounting which aims on the principles of collecting important information and using the financial data. Accountancy is the subject area consisting of certain principles or rules while recording the transactions and classifying and summarizing those financial transactions. While comparing with accounting, accountancy is much wider scope and avenue. Accounting consists of both the conceptual and practical implementation to maintain the books of accounts. Accountancy provides accounting a structure and practice which makes use of to collect, identify, and record all financial and non-financial transactions. Accountancy helps the interested users to get the required information in monetary terms and all the information about the economic resources under the control of the management. Difference between accounting and accountancy. 1. Meaning, accounting is the process of interpreting, analyzing, summarizing and reporting the financial transactions of a business entity. Accountancy provides accounting a structure and practice which makes use of collect, identify and record all financial and non-financial transactions. 2. Explanation. Accounting is the nature of work performance. Accountancy is updated as a career. 3. Scope. The scope of accounting is narrow. Scope of accountancy is wider. 3. Dependability. Accounting fully depends on bookkeeping. Accountancy depends on both accounting and bookkeeping. 5. Content. Accounting contains only the practical side. Accountancy contains both theory and practical parts. 6. Focus. Accounting mainly focuses on specified process of recording all day-to-day transactions, creating the reports. Accountancy focuses on broader principles without going into the depth. 7. Concept. Accounting is a concept that is totally based on the knowledge of accountancy. Accountancy is the subject area that is the route to accounting. 8. Tool. For accounting, the major tools are financial statements. For accountancy, the techniques and principles are important tools. 9. Use. Accounting is used to understand the business income and its financial position and present is to the related parties. Accountancy involves the decision-making function which relies on information got from accounting.
Please don't forget to subscribe.